Hi everyone, this is a technical analysis on gold. Let's start with some fundamental background first. Despite strong economic data and the rise in real yields in the US dollar, gold managed to resist and hold above the 2000 level. In the big picture, rate cut cycles are generally positive for gold as real yields in the US dollar fall, but in the short term, the repricing of the aggressive rate cuts expectations is putting a lid on the price. In fact, as long as the data continues to surprise to the upside, we will likely continue to see lower lows going forward. But as soon as the tide turns, we should see a new all time high coming pretty quickly. Now, on the daily chart, we can see that gold has pulled back into this key downward trend line where we can also find the confluence of the broken upward trend line and the red 21 moving average. This is where the sellers will likely step in with a defined risk above the trend line to position for a drop into the 1972 level. The buyers, on the other hand, will want to see the price breaking higher to invalidate the bearish setup and position for a rally into the 2080 resistance. On the 4-hour chart, we can see that we have some more confluence here around the trend line, with the Fibonacci retracement levels acting as resistance. If the buyers fail to break out above the trend line and the price falls, they will have another opportunity around this 2015 support zone. The sellers, on the other hand, will want to see the price breaking below this support to increase the bearish bets into the 1972 level. On the 1-hour chart, we can see that the price bounced again here on this 2015 support and rallied all the way back to the recent highs around the 2035 level. It's unlikely to see a breakout today, given that we have many risk events ahead and the market might want to wait for some catalyst to decide where to go next. This week is going to be a really busy one with the FOMC rate decision and lots of economic data on the agenda. We begin tomorrow with the US job openings and the US consumer confidence reports. On Wednesday, we will see the US employment cost index and the ADP data before the FOMC rate decision later in the day. On Thursday, we will get the latest US jobless claims figures and the SM manufacturing PMI. Finally, on Friday, we conclude the week with the US NFP report. Strong data is likely to weigh on gold, while weak figures should give it a boost.